Okay, so say somebody applies for this, they get a loan. Does it matter kind of how high that loan is, or like the credit card balance? Is it how much they use? Is it that they're paying it off every month? What are some of the kind of things that add to the credibility of the credit rating?
So some of the things that adds to that is paying it on time. Obviously, not so much that you have to pay it off every month, but paying it on time. Because with business credit, if you're proving that track record or history that you're paying and able to pay that whatever balance or amount is monthly, then they will actually start giving you 10 times the amount of credit that you could get on a personal side. Because
Welcome to the Business Ownership Podcast, brought to you by Awareness Strategies, helping you navigate the waters between entrepreneurship and ownership. Hey there, peeps. This is Michelle Nedelec, and I'm super glad that you're here with us today because I'm here with my most amazing guest, Todd. Todd, thank you so much for being here with us today.
thanks for having me, Michelle.
Awesome. So give us a highlight of who you are and what you do for business.
My name is Todd Miller. I'm a regional managing partner for a company called J. Galt, located here in Meridian, Idaho, but I work nationally throughout the U.S.
Nice. And what does J. Galt do?
J. Galt helps business owners build business credit all on their EIN.
Cool. Okay, so for those that don't know what an EIN is, what's an EIN?
Employer identification number or your taxpayer ID. The last time that you were happy to get something in the mail from the IRS.
That's hilarious. All right, so we will get into all of what that means in a second, but let's back up the bus a bit. How did you get into this as a profession?
Well, I had my own business back about 25 years ago and had to close the doors because I couldn't keep the doors open to keep the employees attending, and found out the hard lesson of business ownership that just because the doors were closed, that business debt comes crashing down on your personal finances. So that's how I ended up at J. Galt.
Ouch. So give everybody an understanding of kind of what happens, because a lot of people think the entire point of having an LLC is that the debt is contained within that LLC and that it is an entity and it is responsible for the debt. So how does then an individual become responsible for that debt?
It's pretty sad, but most business owners are hoodwinked or taught that, hey, get this business credit card. And, when they're filling it out, the bank, no fault of their own, try to mitigate risk and damages, says, go ahead and give me your social security number. And then if they look at their business credit card, it's got their personal name on there, which means it's reporting to their personal credit and piercing their corporate veil.
Well, and I would think that that would also affect their personal debt, because a typical business card, I'm going to assume, is going to be substantially higher than a personal card would be in the same circumstances. Yeah.
Correct. With business credit, you can get up to 10 times the amount that you would get on personal credit. But yeah, most people don't realize that. And that's one of the things that I'll talk to potential members on a almost daily basis. I say, hey, let's just play along. Pull your business credit card out and tell me how it reads. And if I was asking you, most likely it'd say Michelle Nedlick and it'd say awareness strategies below it, which means they asked you to check that little box.
Exactly, which means it's in your name. I hate to break to
Correct.
you.
Which means
Unless it's void of someone's name, it's in your name.
it's reporting on your showing on your debt to income, and it's piercing your corporate veil. So you're now leaving your personal assets liable for your business debts.
Well, and I would also assume that from a credit rating point of view, it's also deteriorating your potential. Therefore, if you go to buy a bigger, larger house, that you're not going to be qualifying for it because you have a substantial amount of debt already accessible.
Exactly. And most customers that I talk to, or potential customers that I talk to, are up to their neck in personal debt. And they don't understand why they can't buy a house or can't buy a vehicle just in their business name, even though they've had a business for a long-standing time, because everything's been reporting on your personal credit. And with business credit, 93% of it is not reported. So if you're not doing it intentionally, how do you know what's being reported and not reported?
So how do you say it's not reported if it's within your debt? So if you're paying your taxes, you're doing your thing, how's it not reported?
reported to your personal credit, but for business credit, with 93% of it not being reported, you need to build business credit intentionally, knowing who they report to of the three bureaus.
So what you're saying is because the credit card is in your personal name, it's not associated with the business per se. Therefore, the business doesn't have, one, access to that credit, and two, doesn't have that positive history going on.
Correct.
Cool. So when somebody's kind of looking at their entirety, their financial transactions and kind of what's going on, let's look at the problems that this creates first, because I think that some people are, let's call it naive or innocent to the fact that of how banks are looking at their finances as credit ratings, because a lot of people think, oh, I'm paying it off, therefore I have a good credit rating, which isn't necessarily true either. So let's kind of back up the bus, and either, well, we can start wherever you want. Either how does the bank do it, or what are the problems that people come across?
Let's talk about personal credit. Banks do it to mitigate risk of their own. So in case, God forbid, you are one of the 82% of the small business owners that fail within the first 5 to 10 years, they don't have any risk because you've put your personal assets on the line for your business. Moving forward, most of the issues, problems that we run into with small businesses across the US, and I'm sure probably in Canada as well, is cash flow issues. Most small businesses run into cash flow issues because they've maximized their personal credit as far as they can go. And so when they hit that lull or that spot where they're really trying to fill that gap, they don't have any cash flow, access to cash flow anymore. Where if they would have built business credit that's attached only to the entity, then they'd have that opportunity to fund their business.
All right, so it's often been said that the best time to apply for credit is when you don't need it. So, if somebody's starting a business, they're not going to get credit for that because they have to establish client relations. They have to. Do you know how long do they have to be providing positive cash flow in order to get credit in the business name?
That's the misnomer right there. You could actually be a startup and start building business credit right away. You could actually have bad personal credit or have a recent bankruptcy personally and build business credit. Because remember, it's not attached to you. It's built on the LLC. So you can get better credit for your business while you're repairing your personal credit.
Right. So I'm going to put in a caveat here because I do know that there is a substantial difference between the Canadian systems and the American systems. So let's just talk about the American systems because it'll keep the conversation tighter and easier.
Okay.
So how does that work? How does somebody go and apply for business credit when they've just started their business?
So there again, you got to build it intentionally, Michelle. So you got to find out who they're reporting to, and if you can find out what their underwriting criteria are. The nice thing about our member journey is we know our lenders and vendors within the credit suite of who they report to, their underwriting criteria, and as our members go through their journey, that they're approved before they even click apply.
Wow. So a lot of people, I think, don't understand how the back end system of credit works. Certainly a lot of them don't understand even how the merchant account applications work and things like that. Is it the same as their merchant account in the back end of that, or is it a different system that the lenders have to go through than a merchant account?
I don't know on the merchant account side. I know on the lender side, there's a company out there called LexisNexis that is one of the biggest collectors of information. They've got 33,000 employees worldwide. And what they do is they collect information for all the lenders and vendors or banks throughout the US. And they know everything about your business.
Right. So, and what are they looking for particularly?
There's the 125 point data list that they are researching for the banks. Is your business listed on the 411 database? Do you have a physical address that's not your house? Are you using a personal Gmail or Yahoo free email service? It's one of the automatic declines for most business loans right there is they don't consider you a real credible business because you're using a free account.
Okay,
The
you're
list
gonna
goes
have to
on.
repeat that one again because I can't tell you how many times I deal with this. So say that one more time if you would.
One of the automatic denials for small business loans or business loans themselves is using a Gmail, Yahoo, or a free email account. If you're in business, you should be tying that email account back to your website so that you look like a credible business.
So for a whopping $30 a year, they can get an actual domain and get email addresses off of it and set that up. So awesome. And I'm assuming too, it's because there are a lot of kind of checkpoints that a lot of people don't realize when they set up a domain name, when they do all of these things, that there's added kind of credibility there. It's not just that you're paying a bill every year to have that domain. It's that you're actually checking in. They know where you're checking in from. See all of the fun things that are going on with it, that you're paying for it, that you have a credit card, again, all these things lead to the credibility of it. Okay, so say somebody applies for this, they get a loan. Does it matter kind of how high that loan is, or like the credit card balance? Is it how much they use? Is it that they're paying it off every month? What are some of the kind of things that add to the credibility of the credit rating?
So some of the things that adds to that is paying it on time. Obviously, not so much that you have to pay it off every month, but paying it on time. Because with business credit, if you're proving that track record or history that you're paying and able to pay that whatever balance or amount is monthly, then they will actually start giving you 10 times the amount of credit that you could get on a personal side, because they know you're running a business and they need to make sure that you have access. Because let's be honest, the more you use, the more they'll give you. Unlike on personal, the more you use, you get to that 30-35% debt to income, they start cutting your cards back and start going, oh, well, we need to start making sure we're safe.
Right. And do you know why they do that offhand?
Why they cut your credit?
Why would they give 10 times more on a business side than they would in a personal side? I mean, it totally makes sense to me, but if you could articulate it for the listeners, that'd be great.
So they're going to give you 10 times more amount because they realize that you are a business and you're proving that you can pay that on time and regularly. Mm-hmm. So they're giving you that because, one, they want you to take more money, of course. And two, they understand that for a business, the expenses are 10 times that of a personal.
Mm-hmm. Well, not only that, but that most people will spend personally as a luxury items, if you want to put it that way. Whereas with business, it tends to be that you need the cash flow in order to be able to rev up the engines of growth. So you need to be able to buy more equipment, hire more people, do more things in order to be able to create more revenue. And as long as that upcheck is consistent, that being the key word there, is especially with banks, they do not like instantaneous growth. They do not like sudden expenditures that they weren't planning on. So, which brings me to, normally a business that has good communication with their bankers can explain these things and find out, kind of mitigate losses and have some intelligent conversations about how do we do this? Is it feasible to do this? Because if all of a sudden there's $100,000 piece of machinery that you need, there are other ways to do it on the business than going and putting on credit card. Just terrible idea. Don't ever do that. Seen people do it. It's just a bad idea. To be able to do that. So with the lenders that you're working with, does somebody have face-to-face interactions with them potentially to be able to discuss their business, to be able to understand the growth, or do they have those conversations with you?
We have a certified financial analyst that walks each one of our members through our proven 7-step process on building business credit. Moving forward, going into September, we're launching a new done for you member journey versus the members inputting their information into the software portal. And there is talks that they will have a once a month meeting so that they can actually meet with some of the lenders and vendors and have that face-to-face conversation, obviously via Zoom, since we've got clients all over the US.
Face to
But
face could be on the
right,
phone, could be anything,
right.
as long as you're,
But you get to ask them questions and, kind of dig down on what they're looking for, or what, hey, I want to, you gave me a credit limit of 40,000. I'd like to get that to 100,000. What do I need to do, or what's this next step? So, giving you access to the lenders, which I can tell you from talking to financial advisors throughout the US, most financial advisors don't even know how to build business credit. And I talked to a gal that works at a local bank here in the Pacific Northwest, no clue. So unfortunately, going to your local bank and asking them those questions may not get you the correct answers.
So I'm assuming that there's more to this than just getting a credit card in your business name and building up the credibility. What are some of the other aspects that people need to be looking at in their business finances?
The first step in the entire process with our members is building that credibility, fundability. So we're basically going through and making sure their business address matches what they filed with Secretary of State. It's also listed on their website, which you referenced. And, one of the ones that most people probably can't understand, especially the younger generation, is your business phone number listed with the 411 database. And you go, wait,
I go, what?
database? Come again? You mean Google? No. So that's one of those
Yellow
automatic.
Pages is still alive, and what happened?
Right.
It's an underground business for the IRS. How does that work?
That's one of those that is another one of those automatic denials if you're not listed with the 411 database, because they don't consider you to be a credible business. So, we're putting all these data points, basically what
okay, so let's back up the bus for 1 second. What is a 411 database?
411 database, for those of you that aren't old enough to remember, is where you used to be able to call in and say, hey, call Michelle at Awareness Strategies, and they would dial the number for you.
But that doesn't exist anymore.
It does.
What? What? How? Okay,
it's still there, believe it or not.
Back up the bus a sec. So if I call 411 and I say, hey, can you call Michelle Nedluck? And they will actually have that on file? If
you've registered with the 411 database.
Okay, so I'm assuming that me registering with any telco, Sprint, AT&T, all of those things, it's going to be registered. I'm assuming that we're looking at, burner phones and SIM cards without that might be unlocked or might be not registered with one of the big boys. If somebody finds themselves in a position, say that they have one of these phones, is it just as easy as going to AT&T and going, hey, can you register me?
Yes, registering it as a business line is just will suffice that, and going through a business plan on your AT&T, Verizon, you name it.
So you have to pay for a business line. Is that key?
Correct.
Because here, I know I said I wasn't going to do this, but I don't know what the American system is a personal line I can pay for, I don't know, $20 a month, whatever. Whereas a business line is like $98. So even if I'm paying $250 for my phone plus data plus international calling plus, it's still an extra $95 to get a business line. So I have to get a business line in order to be able to qualify for the credit card.
Yeah, well, it's not so much for the credit card. It's just you're checking off one of those data checkpoints that LexisNexis is looking at. Right. If it's not a business line, they're just trying to check your credibility and fundability to move you to the next step.
Right, which totally makes sense. But it also seems kind of odd in that if I have a cell phone and I apply for a business line, do you know if there's any consolation for that it's, because once upon a time, the reason you paid the $95 for the business line was because you had 20 lines coming into your, and you had to truncate and you had to do all these things, and they had to come and they had to set up different systems, and, it was actual work back then. So
Right.
Are they still doing that, or is there a different system there?
You can actually register with one of the three companies that ties it into your cell phone. So it looks like it's a business number. I don't remember the names of them off the top of my head, but there's three of them within our credit suite that, we recommend that, hey, instead of, if AT&T or Verizon doesn't do it, you can go and register it here and they will link it to your cell phone. So it's not like the old days where we had 20 phone lines and they had to come in and set it up. Because let's be honest, nobody uses a landline anymore. Everybody
Right?
uses.
Like I'm thinking dental offices and lawyers' offices might still use them. But seriously, like even plumbing companies and things, it's just like, well, why would we have a landline coming in when we can just have a cell phone at the reception and they can run around with the phone and get it to whoever needs it. So it is becoming much more common to not have a landline, even for a business that you would typically think would have a landline.
Correct. I agree. But there again, if you've got a brick and mortar office, you
Mhm.
probably want to have a dedicated landline. Obviously, if you're running internet through there, most of the time it's got to be plugged in. So there's your dedicated landline, and you could use that as your phone line and fax, which would be a landline.
Cool. So give us an example of a Cinderella story of one of your clients, somebody that's come through, not necessarily rags to riches, but chaos too, calm or otherwise.
So one of the Cinderella stories that we use a lot is a company out of Ohio. Her name's Christine, and she had a trucking company. Came to us, no business credit, wants to grow and scale her trucking company to more than one truck, but was just hitting roadblocks. So she became a member and started maximizing each step in the process, learning as much as she could about business credit and how it worked. Well, her success story, or Cinderella story, as you called it, is within 10 months, she had $750,000 of business credit just in the business name.
Wow. Crazy awesome. And what did she do with it?
Well,
Besides go, yay, I have credit.
she went and spent it all on black in Vegas. No, she actually bought a new semi in the business name, no personal social security number given. She put a new roof on her building that she was renting, and actually went ahead and bought a new office space for her trucks, because obviously her business is growing. Now, you said credit cards, but you know what? One of those lenders that she was using and maximizing was a fuel card. How many business owners are using fuel cards? She had a $50,000 line, which, it seems like a lot to most of us, but when you're running semis down the road every day, I remember my dad used to run semis, and it was at 99 cents a gallon. This is probably dating myself. 99 cents a gallon for diesel. And he'd fill up all four trucks and spend about $1,000
Oh yeah.
one stop, and
One
then
stop.
have to do the same thing the next day. So
In some cases, twice a day. Awesome. So that brings up a great point though. Is it now, I think it's an important conversation here too, is the difference between a credit card, a fuel card, a term loan, and anything else that kind of is accessible through this. Like what is accessible through this, and what are we really talking about?
wow. What is accessible to you? New equipment financing, vehicle financing, accounts receivable financing, 401k financing, securities financing. So it opens up an absolutely enormous door of opportunities for your business, so that you never run into those cash flow casualties. Because let's be honest, most of the trades industries that I'm talking to right now say prior to COVID, their accounts receivables was anywhere from 30 to 60 days. Now they're saying anywhere from 90 to 120 days. Actually, I just talked to a guy the other day, and they're at 60, but he's carrying $150,000 of accounts receivables for 60 days. And he was in the cash flow crunch.
Right? Wow. And
So,
does kind of transportation issues and things like that, is that what is affecting that? Or do we know kind of what's going on with that?
well, they have been in business for 23 years, and they have always done it on the owner's personal credit, and they can't get past $900,000, which is phenomenal. The fact that they've been in business for 23 years and they've done it on his personal credit, so he's got to have really good credit. I
Right.
actually pulled his business credit report, and he's got a score and got up to $36,000 of business credit already reporting. So once he becomes a member, now granted that's most likely tier 1 or tier 2 on the credit rating. As long as we get him on the Paydex score above 70 or 80, that's like having a personal FICO score of 750. And if you've got a 750 personal FICO, everybody wants your business.
Awesome. So for somebody that doesn't know what any of these things mean, can they go to you and get a credit report? And does that affect any of their other things that they got going on?
No, they can come to me. Let's set up a one-on-one virtual conversation, a virtual coffee, as I like to call it, and I can pull a business credit report usually within 24 to 48 hours, and it doesn't affect you. Anybody can pull your business credit report. It's about a $50 charge per credit report, but it's public knowledge. In fact, I'm talking to a guy that does a lot of work for government contracts here in the US. And I asked him that question because I read an article on LinkedIn about some of the government contracts will pull your business credit to decide between one or two bidders on who they should give the job to. Another advantage of having business credit built up.
Well, and that would totally make sense to me because they're gonna have to do a lot more due diligence. And if you want a government contract, you're gonna have to do a lot more than just have a website and your name with a public address on it. That's awesome. So what are some of the problems other than we mentioned not being able to get government contracts because you don't have the system set up, not being able to get the loans for the cash flow? Are there any other kind of issues that somebody might be facing that they're thinking, oh my God, Todd, I need to talk?
They don't have it. A lot of the times it's access to capital. Let's be honest, it's either capital and credit that is killing their cash flow, or just purely they don't have enough jobs or clients. Okay, well, let's have a conversation. I can't help you get the clients, but I might know somebody like Michelle that can help you start getting some clients. So it's not a matter of just building your business credit. It's a matter of, hey, I'm here to help the small and medium-sized business owners throughout the U.S. And so are the other regional managing partners that are with JGAL.
So what if somebody has kind of good credit rating right now, or they're running off their personal credit and they're doing just fine?
Well, Michelle, the nice thing is once you become a member and we start building your business credit, we can actually take that business debt that's on your personal credit right now and roll it into your business. So we offload it out of your personal credit, which of course is going to help your personal credit, but also is going to build on your business credit. So just because it's on there right now, let's offload it and get it working for you.
And I think you bring up a great point there because I know a lot of businesses when they first start off, it's like they have a credit card. And that credit card not only buys their food and their groceries and the dog food, it also, can run payroll. So what are some of the things that somebody can do right now before you say they book their appointment with you and they can't get in until 3 days from now? What can they do right now to be able to start kind of differentiating between this is business and this is personal?
Just, most of them are doing it just because they have to. Like
Yeah.
you're talking about, they have to use their personal credit card to pay for business expenses just to keep the doors open.
Hmm.
Well, you can start looking at what's going on there on business and start filing it, and let's start keeping track of it so that when you get your business credit built up, we can offload that, and we know exactly what to offload onto your business credit and start making it work for you. And when I say make it work for you, so there again, like we were talking about, the more you use, the more they give you. Well, if
Hmm.
we offload that off your personal credit, now they're going to show that you're able to pay for more, and they're going to give you more. But also now your personal credit's not tethered to your business, and now you can buy a house, buy a car, and do some of those freedoms that you're not stressed about.
Nice. Because I know initially when we started, it was a matter of kind of getting a 2-person credit card. So, the credit card is initially in one person's name, get the second one in this case, it was my business partner in life and business. And then that way we knew whatever was on his statement was business and whatever was on my statement was personal. So it just had 2 different ways of doing it. I'm not saying go do that right now. I'm saying go and talk to Todd and get that happening. Just there are ways of separating it so that and then you don't have to go through a whole arduous process of trying to figure that out. Because sometimes it can be shades of gray, and sometimes people report things personally that they should be reporting in business anyways. So just go talk to Todd, get that appointment booked as soon as possible.
I would just say on that note, Michelle, just reach out to me. Obviously, you can reach out to me on any of the 3 means. I'm going to have a conversation with you, and it's not a one size fits all, but anybody that's got a corporation, it's only going to benefit your corporation to build your business credit. So let's just have a conversation and see where you're at.
Love it. Love it. Love it. Love it. So if somebody is looking to have that initial conversation with you, how did they start that journey? What did they do?
You can get a hold of me through my email. It's www.tmiller, actually my website, www.jgalt.io/tmiller is my website.
We will definitely have that in the show notes.
Say that 3 times fast.
Yeah, right.
Or you can call me on my direct number is 208-871-0947. And that's my direct cell. Or just email me at tmiller@jgalt.io.
Love it. Love it. So peeps, we will of course have Todd's links in the show notes. So go ahead and click on those, open them up in a new browser because we're not done yet. So Todd, at what point in life did you know you were especially kind of crazy enough to think that you could become an entrepreneur?
That's a funny story because my dad had opened and ran 3 different businesses, and I always thought, he was crazy because he worked all these crazy hours. And when I started my tools and safety business, I was like, oh, this is so great. I run my own business, and I quickly found out that I'm wearing the accountant's hat, I'm wearing the office manager's hat, I'm doing all the hiring, the firing, you name it. And I was like, ooh, this isn't so great after all. I'm working more hours now as a business owner than I was as an employee. So, but I enjoy it. I really do. My goal is to try and rescue as many small, medium-sized business owners throughout the U.S. as possible. Because if we rescue a business owner from personal guarantee, then how much stronger does it make our individual communities?
Right. I think that now is a time when more so than ever, entrepreneurs need to get together and rally together, support each other, get rid of this idea of competition and killing the opposition, start building each other up, because personally, I think that entrepreneurs are going to save the world. You have to understand so much about so many things and understand your own intestinal fortitude, what you're made of, and how to help other people. So I'm right there with you.
Group. Gotta have a support group. And that's why I say, whether or not you want to grow and scale your company and start building business credit or not, maybe you need somebody that's going to help you get some more leads, like yourself, or you need somebody that is good at websites. I just talked to another client this morning before I came on your show. Hey, I'm doing a special right now on website developing. So, it's not a matter of what it's who you know. And, if we're all working together and rowing together, we're going to be stronger and we'll be able to weather the storm.
Love it. Let me ask you this. I didn't ask you this. Is there any disadvantage to increasing your business credit rating?
No.
Okay. So anybody and everybody should be calling you no matter what to go in, at least check out what's going on. And if not, to build it up, because 1, the best time to get credit is when you don't need it. And 2, having a community when you do need it, it's paramount.
Having an insurance for when you do need it is important for sure. And, just because you apply for the credit doesn't mean that you have to use it. you have access to that credit and capital for when you do need it. And that's one of those things that any corporation, S Corp, C Corp, and even nonprofits can build business credit on their EIN.
I love it. I have a crazy dog behind me right now. But you've been absolutely awesome. Do you have any last words for our peeps?
Let's just have a conversation. It doesn't have to be scary. Wall Street's done this for hundreds of years, and I'm trying to bring it down to Main Street so that Main Street can actually receive the same benefits that Wall Street's received for hundreds of years, and they don't want you to know. I'm here to tell you we're industry disruptors, and I will tell you.
I love it. I love it. I love it. Thank you so much for your time. You've been fabulous.
Thanks for having me on, Michelle. I love it. And I love our conversations.
Awesome. Peeps, thank you for being here with us today. This is Michelle Nedelec. Be sure to subscribe to the show, share it with your friends. We love helping entrepreneurs grow.
Are you running a business over 7 figures but still struggling with technology headaches? Pay attention, you do not want to miss this offer. This podcast episode is brought to you by Awareness Strategies, who is offering a custom-built digital adoption roadmap for anyone running a business over 7 figures who's wanting to grow their business in the next 5 years. And it's not just a roadmap, they offer full implementation as well if that scares the out of you. Check out awarenessstrategies.com/roadmap for more details today. The link's in the show's notes. Don't regret not doing this. Do it now. That's awarenessstrategies.com/roadmap.